Okay, now we talked about the situation in the soybean market. The angle that we have going down here, pointed directly downward. We have the situation with the lows back over here, coming across in the roughly 880, 890, that vicinity. If these lows are penetrated, that suggests that this year, 2010, is going to be a pretty weak year for soybeans. Now, the low at 913 that's the low we had for January, so we've already dropped below that Monday. So in the initial trend, it already signals that the initial trend is going to be lower. The high that we had for January at approximately 1075 here, so that's the peak. That needs to be exceeded. That January high needs to be exceeded to indicate that the initial trend for the year, would be to the higher side. When you look at the price between 1075 and the 913 that we're talking about, that's quite a range as far as a person trying to use one versus one as a stop for the other. Pretty wide range, pretty risky, so it's probably not the type of thing you're going to do, but it is kind of the numbers to keep into perspective as to what could happen with the charts. I'm going to go back to the computer screen and go to what probably will be most people's favorite. If they don't trade soybeans, they don't trade oil, they don't trade some of these other things, and that is the E-mini 500. As you can see, we have a situation where the market has trended up, and we're going to do a little switch here. I'm just going to take off some of the, show you a couple of properties here. I'm going to put the high and lows on here, and then I'm going to switch it over to our other screen and then talk about it a little bit as to what potentially could happen with the E-mini. As you can see here, we have a situation where the predicted differences have definitely turned to the downside, indicating that even though the market was moving higher, the predicted differences, the momentum was not really buying it. It's kind of indicating this whole up move that we've had in the last few months was kind of a little bit of a weak scenario that we have had. We're going to cut this back to 3 months, and now we're going to go over to take a picture of it and talk a little bit about what we're going to be looking at on the chart in terms of an actual trading signals and what to do about them. By the way, the high for the E-mini in January was the 1148, the low 1066. So that kind of is your frame of reference as far as the range is concerned for January for the breakout situation. First thing we're going to do, wanted to show you, is that on this particular we were talking a little while ago about the January effect, what happens during that first 3 weeks or 3 days, 5 days of the year. You can see that we have this period right here where the market did go up. So the January effect did go up. As I mentioned, I think it was 2.8%. So that particular part, did work as far as it was concerned. Now we're going to look at the period that we're concerned about with January, try to box it out a little bit and show you precisely where that came in. And we're at about right here. Okay, there's our box. That's our frame of reference for January for a January breakout type of a situation. As you can see, when the January effect took the market higher, nice little gain that we had at the start of the year, but then what happened? The market kind of started to turn down. If you were looking at the period of time that we were talking about here and making a trade within this particular situation, again, we could turn to the vantage point indicators. There are a couple of spots here. Typically what you would want to be doing if you'd see, as I mentioned before, we had this downturn right here and the predicted differences. So definitely you would want to be doing something with, on the weaker side, because you're anticipating that this market is going to go lower when the predicted differences show the momentum is fading away. You have situations here where you have the predicted lows, being exceeded. So now the question is where to place the trade. The way that I do it, and it depends on how you would want to do it and the amount of risk tolerance you want to take and so forth, but on the particular bars that we have here, we had a situation right here on this bar The previous bars you potentially could have gotten in, but depends on how much you want to allow for the penetration of the predicted low before you actually get in. But on this particular bar here, we had a situation where the low was 1138, so that means that you would be selling, and I'm using 10 points because the S&P kind of gyrates down a lot, but I'm using 10 points, so I'd want to be short at 1128. So you would have gotten into this market in a short position somewhere in here, and surely by that next candle where it definitely went down. Now, if you were really good and you said, okay, I see that we have a weakening situation shaping up, there's another alternative to trade this, and that is to fade the predicted next day high. The predicted high was at 1141. The actual high was at 1139. So if you put a limit order to sell in the vicinity of, let's say, within a couple of points, 3 points of that predicted next day high, that potentially would have gotten you into a nice position with, really a nice extra little boost for the downside. Now, when you look at the situation, then the predicted high for Tuesday, we're talking about current times now. The predicted high for Tuesday for right here was 1096. So that means we're going to have a stop at approximately, again, using our little 10-point increments at 1106, or somewhere right in here, in case this market turns around, starts to go higher. You don't want to lose the profits that you've already accumulated. We're going to skip out of this and go back now to our other screen. I'm going to show you a little bit more on Vantage Point on a couple of stocks that I think are particularly interested. And again, I just picked them out to make sure that that you are aware of and aware, that these are influences on the market and what could happen in the future. The first one we're going to look at is going to be a stock. We're going to go through several stocks, but we're just going to talk about several interesting stocks. And the first one is U.S. Steel. As you probably are aware, U.S. Steel has had some pretty significant reports of losses and prospects for losses and so forth. It made a nice long run. If you see this crossover here, the moving average crossover to the upside would have made a nice long positioning trade, ran all the way up until you get into January and everything was looking rosy, and then all of a sudden, boom, we get the profit reports and we get the outlook and so forth, all very negative, and the market instantly turns as it makes a downturn here, crosses over to the downside, signal there that this is time for a short position.